So when we turn to Europe, we want to start with the economic expectations. So there wasn't too much data. There'll be more next week. So we'll just try to keep this light and a bit quicker as we did that deeper dive last week on what that heating crisis, what the shortage on energy is really doing to the European economy, which is obviously making it much, much worse. But when you look at the expectations, they continue to fall. And it's really not surprising when you look at where energy positioning is. And it's funny because when I was at Bloomberg and before, we always tried to say, like, look, I'm not saying that solar and wind is a bad idea. It's just it works in certain areas. And you have to be respectful of, well, where doesn't it work? And how do I make sure that I have the power that's required? And you're starting to see some of these shifts with now German headlines highlighting why maybe the nuclear push was too severe and should be walked back. And when you think about input costs are massive, especially for Europe, when you're looking at where you're importing a lot of these raw materials, and your input costs are going through the roof with very limited storage as you prepare for heating season, putting additional pressure on just the underlying market and economy, which is why you're seeing this additional pressure on economic growth expectations, which have weakened. Now, they have weakened even more in Germany, while they've weakened on economic growth, and you can see that it's now back to that pre-pandemic level, the biggest issue is, where is growth going to go given they can't produce cars because it continues to fall, input prices are going up, which is taking the wholesale price index to a new record, this going back to 2005, which just means that there is going to be more than enough inflation coming over the next few months. But then when you look at Eurozone retail sales, they're very much in line. They've come back to kind of the trend line, and we don't expect that to change too much because on the service side, you're starting to see some of that, fairly consistent growth. You had a little bit of a move down, but we think we get a recovery. It's the manufacturing that comes down. So retail will come up, manufacturing will come down, again, weighing on some of that growth because manufacturing is such a big part of Europe, especially Germany, which is, again, kind of that growth engine of that European basis. So this is just putting it into perspective. Going back on the German wholesale price, this is the biggest increase that they've had going back to the 1970s and realistically 1973, 74. So inflationary pressures keep rising. Germany's wholesale price jumped 12.2% year over year in September versus 12.3% in August. This was the highest monthly annual rate of change since June 1974 after the first oil crisis. From August 21st to September August 2021 to September 2021, wholesale prices rose by 0.8% month over month. So you're seeing an acceleration. And again, it's not, unfortunately, it's not going to be this big spike and drop. There's a lot of pressure to keep it up there, similar to what we had back in the 70s. When you look at coal, when you look at electricity, when you look at oil availability, when you're looking at just diesel, fuel oil, all of these things are just going to keep these pressures elevated. Even though there's more than enough oil in the market, it's just the way they've handled their electrical generation is adding to these pressures that are already there from these rampant logistical issues and global shortfalls, which is when you look at the further slowdown ahead in the European Union zone export growth. China mainland PMI import sub-index 3-month average advance 2 months is now negative, as we've been talking about, when the Eurozone, especially Germany, sends a lot of product into China. So as this comes down, again, it's going to pull down the Eurozone data as well, not so much into contraction, but just bring it much closer to back to some normalcy as these pressures continue. So then when you look at the IHS market Eurozone PMI versus GDP, the headline market zone Eurozone composite fell sharply in September, dropping from 59 in August to 56.1. to indicate a further cooling of the rate of expansion from July's 15-year high, according to the flash reading, which is based on around 85% of replies. The latest increase in business activity was the smallest since April, albeit still well above the survey's pre-pandemic long-run trend of 53, to signal another month of above trend. Again, now that we're saying it's not contraction, it's just growth is moderating, and that is going to be that weight that we keep talking about. But where? So the Eurozone price changes, manufacturing price changes continuing to move up, composite price changes flatlining, while services, this is where services are going to take another leg up as that manufacturing kind of holds steady. But even though it should hold steady, there's other pricing pressures that are pushing it back up, which again is weighing on where these are going to be realized, because manufacturing input prices are stuck up there, with manufacturing supplier delivery times getting a little bit better, but the input price is the biggest issue that remains the overarching overhang that we continue to talk about in this market. And then that's why we've seen Germany factory orders coming down. In August, expectation was for negative 2.2%, came in at negative 7.7%, and the orders for cars dropped significantly because cars and auto parts fell because they're not seeing, they just can't build anything because they don't have the parts. And you're starting to see now a drop in what people are willing to spend for cars. And that's slowing down as well on the automobile side, on the building side, which again is another broader headwind. And then the German industrial production, including construction, survey was for negative 0.5, came in at negative 4%. And then the German manufacturing production, ex construction energy, came down and is the lowest it's been since the pandemic began, since essentially back to a pandemic midpoint, but well below where we were on the pre-pandemic side. So you continue to see, again, Germany as the biggest overhang. France, Italy has been doing very well. Relatively speaking, France is kind of flatlining. It's Germany that remains the overhang. Now Merkel is ending 16 years in office. We'll talk more about where is the election, is that going to shape growth? Is some of this an overhang of people like, I don't want to do much until I know what is happening? There is some of that. But a lot of this is structural and cyclical, which is why we continue to see these overhangs in underlying growth as energy prices go higher and this growth continues to moderate, again, weighing on those estimates that we've talked about in segment one. So now that we've gone through Europe, we want to pivot again and talk more about Asia with a bigger focus, obviously, on China and where things are shaking out on the real estate side.